Hello everyone, this is Nick Perry at Schaefer's Investment Research with your chart slideshow for Friday, September 21st. Today I am back with my weekly check of the broad market indices. In last week's chart slideshow, we were talking about the setup ahead of the Fed. And basically I said that if I was on a deserted island with no information other than charts, I would say the action was constructive. However, with the Fed looming, I said it looked more like people were just sort of waiting on the sidelines. And said I don't typically put a lot of predictive value in the charts ahead of an event like that, given that it has so much impact on the market. And I ended that by saying if we did see a move above this resistance here on the SPX, that I would consider that an encouraging sign. Well, on Tuesday, the Fed came out, as everybody already knows, they cut the Fed funds rate and the discount rate by 50 basis points each, and we saw quite the rally. The SPX popped above that resistance there. The Dow, which had actually been flirting with that support zone, popped above its 50-day moving average. The comp overtook resistance here. And the RUT actually was the only index that didn't push above resistance, but pushed right into that zone right there. So as far as takeaways go, last week I said that if we pushed above this resistance here, I would consider that an encouraging sign. We pushed above it, so consider me encouraged. Basically what I'm going to be looking at from here on out is this former resistance should now be expected to serve as support. I mentioned in the blog the other day that the SPX and the Dow had hit overbought territory. Short-term basis, basically, buying got a little bit overdone, and we saw a little bit of a pullback yesterday, so that's not too surprising. When you see a strong run, you do see overbought conditions. The one thing I will point out, and I've noted this in the past, is that overbought and oversold behave differently. Oversold, you tend to see V-bottoms. Overbought, you do not tend to see an immediate reversal. In fact, a lot of times overbought remains overbought, and I think that's based on the different dynamic between buyers and sellers. People on the sidelines are waiting to be buyers. People on the sidelines are generally not waiting to short. So you've got sort of a discrepancy there in terms of when you look at how things are laid out. But basically, we pushed above resistance. That's now support. This former peak in the SPX is obviously a level to keep in mind, but it wouldn't surprise me to see a little bit of a pullback towards that support zone. As long as we remain above it, I'd consider that encouraging. So aside from the index levels to watch, the other point I would like to make is keep an eye on the media and the reaction to the Fed's cut. There seems to have been some skepticism in the last couple of days about the Fed sort of questioning whether they did too much, whether they needed to do that. And I think that's somewhat encouraging from the standpoint that we got a market rally and you're not seeing everybody rush to say buy, buy, buy. Obviously there are some people who are in that camp, but there does seem to be at least some skeptics out there. And, as a contrarian, you like to see at least some of that. So anyway, that's what I'll be watching in the coming week. As always, stay tuned to the blog for further updates, and have a great weekend.